I would love to know, Manish, and then we will try and take that question to Gautam as well about, you know, where do people fish? Let's assume that, Manish, that people didn't have money, right? Or everybody's invested, but people can swap. I mean, loss harvesting is a great methodology as well, right, per se. And you get into some stocks that you always wanted but couldn't buy, and now they might be at the same prices. So I would love to know, Manish, and I'll read the MK strategy note, that's the sell side, but they are saying that 22,000 is good. You are saying this is good. Where is it that you find comfort as pockets that you would keep an eye out for, if not buy currently?
So basically, consumption is the next big theme in Indian markets over the next many years on the back of the leeway that has been given in the budget, plus the 8th pay commission, which is going to get announced in the next year. I mean, that creates a good buffer for consumption stocks, and discretionary consumption would really do well. Financials, they hardly are impacted due to whatever is happening on account of reciprocal tariffs. So banks, NBFCs, insurance, capital market, these are the areas where bulk of the value resides on every downtake. And obviously, due to the readjustment of reciprocal tariffs or whatever you may call it, I do find good value in the technology and the pharma space as well. Of course, the final word of that will be taken when you actually see the announcements of the tariffs or the embargo on manpower in terms of H-1B visa and so on and so forth. But all these sectors do offer great value, according to me. I mean, see, everything has fallen, and so everything looks very appealing. But I think what has been time tested in India is basically your 3 PEG number. So any sector, any industry, any company, broadly, if you are very sure about the earnings growth, and if the market P is, let's say, market earnings growth is, let's say, 10% or 12%, and the P multiples on Nifty 50 is around 20, 22, so two times. I mean, if you are able to find value across segments, mid cap, small cap, large cap, which is in that ballpark valuation range of 2 PEG, then broadly you are okay. I don't see too much of a pain, provided you get your earnings right. There is value across the board, but I think the investment side of things, the so-called long-dated order book position, still can be let go, and you could actually buy into a consumption and a financials and financialization and insurance and ITs and farmers of the world. You will be broadly relatively well placed. The cyclicality element in these sectors would be relatively on the positive side, as opposed to the investment related things where the cyclicality will now be on the negative side.